Hello, it's Friday the 14th. I'm FxPlew and this is the market brief. Can you guess which donut forgot to charge the air wheel last night? This guy. Anyway, it wasn't too long ago. The government's position on public sector pay was that anything over 5% would add to inflation. That would fuel a wage price spiral. That would mean the Bank of England would need to hike rates even further. But in the past few days, public sector pay deals have been announced between 5 and 7%. Many in the NHS will receive at least 6%. Junior doctors will get a long overdue award of around 9%. But government borrowing is already close to 100% of GDP, and it's set to rise further as interest rates increase the cost of servicing debt. Don't forget, the government is still trying to pay for all that support provided during the pandemic. Add to that an ageing population, which means fewer tax receipts, and the Treasury has got a bit of a dilemma on its hands. Indeed, the Office for National Statistics published data yesterday suggesting that the UK has the makings for the most serious debt issue in the G7. The G7 includes Italy and Japan, which are casually rocking a debt to GDP ratio of about 130% and 160% respectively. It's a pretty scary stat. But meanwhile in the US, inflation dropped to 3% in May, and this has increased speculation that the Fed will extend their rate hike pause for another month. The finishing line looks to be in sight stateside, with the upward revision of Q1 growth, continued strength in the jobs market. This fall in inflation means the Fed may have engineered a soft landing, and many feel that Powell deserves credit for sticking to his guns along this journey. Of course, some say there's more luck than judgment here, but haters gonna hate, right? But the idea that the Fed may pause again has been extended, and there are even suggestions that the Fed may announce an end to the rate tightening cycle at their next meeting. And all this chatter has rather pulled the rug from under the dollar. The dollar index dropped through the 100 level yesterday, down to a low of 99.75. Sterling broke through 130 against the dollar with apparent ease. We topped out around 131.40 yesterday. We opened this morning around 131.15 against the dollar, about 116.90 against the euro, and euro dollar is up around 112.25 as that dollar descent continues. Right, that's it from me, capping off another week. Thank you very much for joining me again. I'll be back on Monday. All the best.
If you do not have a clue, then just tweet through and ask FxPlew.